GBP versus the USD triggered a beautiful inverse head and shoulders pattern last week. That's what we're going to talk about in today's currency market update. Alright, before we start, don't forget to check out the top comment on our videos. That top comment takes you to our premium trading course and on a page on investingcube.com, which is a website we work with. Over there you have more information about that course, and you can effectively download, register on that site and watch the first video for free. I use the same techniques to trade the financial markets. The last trade I traded with that system was the Nasdaq 100 I bought here last week for a push to the upside. I did also trade Aussie dollar versus the Japanese yen, and unfortunately I got stopped out of that one. But it was similar based on patterns where we had a nice little break here and about 24 hours of glory until the market effectively tumbled and went pretty much back to my entry. But as I said in the beginning, let's talk a bit about the GBP versus the USD. All right, so this is the GBP versus the USD, and you can see we had a bit of an inverse head and shoulders here. You had left shoulder, right shoulder, head, and then the difference between these two levels gives you a target of about 133. As you can see here, it was slightly above that level. Now the optimal entry was actually just before the breakout down here. That would have been the best, but we pushed above. We actually triggered the breakout when we closed above this level. Now we're having a bit of a pullback. Now it's actually perfectly fine to buy here if you wanted to, and effectively just be bullish above 28.40 or possibly even 28.84 to improve the risk reward ratio. But if you're a bit like me, you want to have a very good risk reward ratio, which I don't know if we're gonna get, then I would wait for a slightly stronger pullback, and I think we could get away with stops here. And then if we go up to 132, you're looking at 1.68, which again is not even ideal. You could potentially tighten things up even further like that. You get your 2.44, because it's not always that we're gonna get good risk reward ratios. Like, why did I get such a good risk reward ratio on the Nasdaq 100? That's just because I entered immediately after the breakout. So I entered here on the 5-minute here, and I put a stop loss based on the 5-minute as well. So I had a super tight stop loss. Now, what I did there as well is just that I didn't put too much money at stake, but because the outcome was so good, it was worth it. Let's move along. Let's talk a bit about the euro. So this is the euro versus the USD. And last week we said buy here, and we bounced from this level once, twice. You get two opportunities to get involved. A couple of days later we went upwards, almost reached 1850. 1850 is a really good opportunity to get out. And here in the short term, as long as you're above 1712, I'm going to be bullish. But I'm not going to be bullish up here. I want to see a bit of a pullback to support, and maybe from down here, bottom out, hit the same high, possibly all the way up and reach 1850. And that, guys, concludes today's market update. Don't forget to check out the other videos we have on the website. Don't forget as well to subscribe, and don't forget to check out that premium trading course. You get the first 45 minutes for free. Gives you an intro to a little bit how I trade, who I am, and the systems that I use to trade the markets. Have a great day, and I'll see you guys soon. Thank you, and bye-bye.